we're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts on the show. Joining us today are technical analyst and mentor in Fidai, Rahul Randeria, who's an independent market expert, and Aditya Agarwala of Securities. Many thanks to all of my guests for joining me. Before we begin with the show with the analyst, let's bring in Yash Upadhyay, who has a chart on Vedanta. Good afternoon, Yash. What does the chart indicate?
So Darshan, metal stocks have been hammered left, right and center. Vedanta in particular, there were issues with respect to corporate governance when the Anglo-American issue came out, and several other factors on the back of which metal stocks, particularly Vedanta, has come off quite a bit from the levels of about 200 to as low as 140. It made a swift recovery back again to the mark of close to 190 and has seen a steady fall again. But here is where it saw a big move in yesterday's day of trade. We've joined a trend line to join the lowest points over the last 6-month period, and from here it has taken support. It's moved higher today as well. It's still sort of flat on a previous day basis, but the trend seems to be on the positive because the stochastics indicator too in the lower panel has given a positive crossover. The blue line has crossed above the green line and has given a positive signal for Vedanta. So that indicates that probably we'll see some of these metal names, Vedanta, Hindalco and the likes, move up from these current levels.
Okay, and the last time something like this happened, what's the historical trend on this?
So the reason I picked up Vedanta is because on the stochastics, the indicator has a higher efficiency for Vedanta in particular. So because 6 out of the last 8 times that this has managed to occur, the stock has managed to run up 5.5% on an average over the next 1 year period, 1 month period. Okay,
that's the view that's coming on Vedanta. Thanks so much for that, Yash. Ines, what's your sense on Vedanta?
Yes, somewhat agree, but would love to prefer buy around 154 and keep a stop loss at 152. I see upside maximum right now in extreme short term at 170.
Okay, you won't buy at this level.
If you buy, then the risk reward is not so favorable.
Okay, Rahul, what's your sense?
Yeah, definitely. Last 4 weeks has been under pressure and severely the price damage has been seen. Yesterday's candle was engulfing bullish pattern, which has recovered the last almost previous 3 days downfall. So definitely the momentum has seen that lower level supportive action has been seen. We could see a technical pullback from the current levels, but as if we are coming into the election result days, so there would be highly volatile, so it could be a high risk trade. Definitely one can buy at current levels with a stop loss of 153. An upside target would be probable 172.
Okay, buy on declines again, and would you agree? Would that also be your strategy?
I would buy above 164. 164 is an immediate resistance for me. If the stock manages to trade above 164, I'll buy for a target of 170. We'll put a stop somewhere around 158.
Okay, that's the view that's coming in on the first stock, that is Vedanta. Either buy on declines or buy if the counter gives a breakout, not at the current level. Risk reward certainly does not seem to be favorable. So that's the sense on Vedanta. Let's begin with the first call, and that is a buy call on LIC Housing Finance, and that is what NS Fidai has for us. Pull up the chart. What's the indicator that you've used, NS?
Well, I have used classical indicators. Basically, what we are looking at is a higher top, higher bottom formation. Since it made a major bottom here, the stock has made a higher top, higher bottoms. If you see continuously, and that is also giving respect to this trend line. So basically, now it is available very near to the trend line support. So one can buy nearer to the trend line, and that would be somewhere near to you can buy up to 460 on the downside. And on the upside, the stock has huge potential. But before that, you should see also this it's a expanding kind of channel here that is happening. And also the long-term resistance has been broken, and the stock took support exactly on that trend line, the green trend line. That is the long-term resistance line. So the stock is now available in a very good zone, where you can say the risk reward is in favor, and rewards are very high. You can say 505, 525, 570 could be the targets on the upside. So this could be the
you see it coming back to this level as
because it is being respecting the same thing again and again.
Okay.
So and and the risk is low, very low here. So, and there are multiple supports. There is a like this support from the previous, higher top, higher bottom, and the long-term trend line also giving a support.
So would you buy? It's at what, 480 right now. Here also you've seen a consolidation, and then it finally broke.
I would prefer to buy on dips. Like you can buy at 480 also right now, but make sure that you have provision to add on dips up to 460.
460 was the
stop loss at 454, just 1% or 2% below that. So that is very favorable. Like on the upside, there is quite a good upside, 505, 525, 570.
Okay, so that's a classic chart that's coming in. Thanks so much for that, Ines. Aditya, agree?
So this is more of a contra trade. The stock hasn't yet given any breakout or a trend reversal. If you take a look at the today's candle, it's a dark cloud cover pattern. So that is still telling you that the trend is still to reverse. But yes, the one thing that goes in favor is the risk to reward is in favor of going long. So I'll put a stop somewhere around 470 and take a bet, just 10 rupees to lose from here. If the stock reverses, starts to trade above 490, definitely it can test levels of 520 on the upside.
Okay, what about you, Rahul? Is this the strategy that you would employ?
Yeah, definitely. I agree with him that the stock has been forming an expanding triangle pattern on technical front, but again on the fundamental front, that the GST rate cut from 5% to 2.5 for the new house buyers, that would be a trigger for the housing finance company in the coming months or so. So definitely, I would not be buying at current levels, but yes, one could make a pyramid from current levels, accumulate from 479 to almost 455. Investment stop loss would be 430, and as he said that the target would be 560 in the long run. Definitely we could see a momentum pickup in the stock, but it would be a slow mover. So it should be a buy and dip strategy.
Okay, that's the view that's coming in. I think no one's having a bearish view, but it's a consensus bullish view. Even it could be buy on dips or hold on for a positional trade. But that's the view that's coming in on LIC Housing Finance. The next one is on Federal Bank, and that's the stock that Rahul is recommending. Let's have the chart. Numbers were decent for Federal Bank. It always tries to go close to the 100 mark, but somehow always fails. This time around, you think 100 will be broken?
Yeah, definitely. If we see the price behavior from these levels, the stock has been slowly and gradually moving upside, making higher tops, higher bottoms, and the volatility is getting narrower and narrower day by day. And definitely, it is just nearing the breakout. The oscillators are also oversold territory, so we could see an uptick. Definitely, as we discussed earlier, that we are coming into the election week. The result, there would be high volatility, so one can accumulate from current levels, which is 97 to maybe 91. Stop loss, investment stop loss would be 87. On the upside, I feel that we could see a breakout, and the target would be 127.
127. Just a view, because if you see the channel that's happened, it's somehow managing to go back from 100 level. It manages to bounce back, and it actually comes down this thing. What gives you the confidence this time around? There will be a breakout, not a breakdown.
Yeah, because if you look at from these, as I said, that the volatility is getting narrower and narrower, and currently the prices is just lingering over this level. And as you said, that the result were also good, which could trigger the upside. But looking at the high volatility within the coming days, if stock drift down from the from current levels to lower, that should be used as a buying opportunity.
Okay.
But one has to place a strict stop loss of 87 because of
87 and buy up to 90 rupees.
Yeah.
Buy up to, okay, that's the view. Thanks so much for that, Rahul. Aditya, Federal Bank.
Yes, I would go long in Federal Bank. Stock has beautifully taken support at the 61% in the recent correction post its move to 102. From there, stock has resumed its upward trajectory in trade. Yesterday, it gave a good bump up. Today also, it's flattish. I believe at current levels, one can go long, put a stop somewhere around 94 and look for a northward target of 105 to about 110.
Okay, so again 100 is something that 100 probably will be taken out this time around. Ines, you believe 100?
Almost agree with him. 95 would be my stop loss at the moment, and if it breaks out above 103, 104, then you can expect it to go up to 116 approximately, up to that area.
Okay, so that's the view, consensus view, I think, on Federal Bank. Strategy is different from a different analyst, but no one's indicating a bearish view. I think it's more of like a accumulate on decline or go in for a breakout. But all analysts do believe that 100 is at least on the cards for Federal Bank in the coming days. The next chart is on L&T Infotech, and this time around Aditya has a call on it. Remember, after quarters and quarters of giving out good numbers, yeah, Aditya, you can have it. This time around the numbers were poor for L&T Tech, and and probably that's why you didn't see a big spike up that came in. But is it a bullish call?
Yes, definitely it's a bullish call. So if you take a look at the broader picture of the stock from September last year onwards, it's been moving in a triangle pattern. It's a symmetrical triangle pattern wherein it's converging towards the end of the pattern. And what it has done in trade today, it has broken out from an ascending triangle pattern. If I join the highs, this high, this high, this high, I get a straight line. And if I join the lows, which is making higher highs, I get an ascending triangle pattern. It's a bullish triangle pattern. Within that long symmetrical triangle pattern, it's broken out from the ascending triangle pattern, and it's backed by healthy volumes in trade today. It's almost up 15 rupees from the time I'd given a call. Along with that, if I take a look at the corrections that the stock has witnessed, this correction was 61% and this correction was again 61%. Again, this correction of this entire move was 61%. So this tells me that every time the stock moves into a corrective mode, it takes support at 61.8% Fibonacci retracement level, which is a very healthy sign for the stock. So this all tells me that the bullishness is still intact out here. Again, if I take a look at the RSI has continuously taken support at the 50 level. If you clearly take a look at here, it has taken support somewhere around here, 50. And from there, it has moved higher and it has crossed its previous peak. So all in all, it suggests that there is bullish momentum in the stock. You can go long in the stock for targets of 1850 to about 1975 on the upside. One can put a stop somewhere around 1680 on the downside.
Okay, just a quick question. What's the importance of 61.8%?
So 61.8% happens to be the sacrosanct level as far as Fibonacci retracement levels are concerned. If a stock takes support at 61.8% and from there reverses back up north, that tells that the bulls are still intact. It was just a correction within that major up move, and from there bulls have taken the stock higher. So if the stock manages to take support at 61.8, which is done here, it is done here, so that tells me that the stock is poised to make higher. And if you take a look at the highs, they were around 1740, and in trade today it has managed to give you a breakout on good volumes.
Okay, so it's more like a positional buy on declines also.
Yes.
Till
so
what level should one buy?
If it comes down to 1740, I'll again buy because it's already moved 15-20 rupees from my buying price. If it crosses back to 1740, I'll buy again. Even below to about 1735, I'll be a buyer in the stock.
Okay, thanks so much for that, Aditya. NS, what's your sense on L&T Infotech?
Actually, it has given a breakout in today's move, and it's a triangular breakout. The stock looks all set to go up to 1840, approximately 1840, 1880. So one can go long right now also and keep a stop loss around 1724.
Okay, that's the view. And Rahul, is that a bullish call from you also?
Yeah, definitely, because last 6 months, the stock has been trading above its 100-day and moving in the band of 100-day and 200-day moving average. And after making a firm base, the stock has poised a setup where we could see a rally coming in. And again, the USD-INR weakening of USD-INR supporting the IT companies. So definitely, we could see an upside rally. Traders can buy at current levels and on corrections to maybe 1720. Upside for the upside target of 1870 on the for short to medium term, and stop loss should be placed just below 1680.
Okay, that's the view that's coming in. I think it's a consensus, a bullish call that's coming in on L&T Infotech. Let's start the second round. This time around, it's a PSU banking stock. NS Fidai has a buy call on OBC. I believe the numbers came out yesterday and did manage to move up in trade yesterday. 91, the stock is at 91. What's the logic and why are you bullish?
Similar logic I have found very similar, like low risk bet for our viewers. So like see this multiple support on this trend line, it's very near to the support area. One can go long here and keep a stop loss below 87. Okay. On the upside, the potential is it can go all the way up to the upper trend line,
which
it's
is 116,
almost 116. So you can expect 102, 109, 120 on the higher side because it does overshoot many times. So you can expect a little bit of overshooting over there also. And the time would be something like 2 to 3 months, and it would be a bit sluggish, but because it's consolidating well here, it seems like it is making a good base. So
okay, for people who would want to wait for a breakout trade, because people you say accumulate now, there will be some people who would buy only on a breakout. What is the breakout level?
So this would be the breakout level. Above this, if it starts trading, that is above 97, 98.
Okay.
That would be the breakout.
So people who would want to buy on breakout, they should aggressively buy only above 97.
Yeah, if they want to buy above breakout, but here it is a low risk. Actually, see, when you buy nearer to the trend line, your risk is very low. Your rewards are very high.
Okay.
So I am trying to go for those strategies where, like in this volatile times, we should not lose too much money, and capital protection should be the most important thing right now.
Sure, fair enough. That's the strategy that's coming in. Rahul, OBC at 91, would you share the same view?
Yeah, definitely. But as we have seen, the charts has been showing highly volatile. Whatever the rally has been seen has retraced 80% of that previous rally. And again, similarly, which has happened in the last 4 to 5 weeks. So definitely the stock is replicating that particular pattern. So definitely from current levels, from 91 to maybe 85 would be the area where one could accumulate. Why I'm saying accumulate on the dips, because we have to keep some cushion because of the event which is coming over. We could see wild swings coming in the stocks, and if anybody wants to trade above the breakout, can wait for 97 to be broken out. So definitely one should either buy at current levels and on dips, or above 97. And in the maybe next 3 to 4 months, we could see stock testing the levels of 115.
Okay, that's the view that's coming in. Aditya, what's your sense on OBC?
I would only take a trade just purely because of the fact that it's a low risk setup at the moment. It's standing close to its trend line support, which is around 89, 88 zone. At 91 levels, it's just 2 to 3 rupees the downside that I'm looking at. Upside could be 110, 115. So definitely I'll take a punt, keeping in mind that 88 will be my strict stop loss. If the 88 is taken out on the downside, I'm out of the trade.
Okay, that's the view that's coming in on OBC. Let's get the next chart. And Rahul has a buy call on Coal India. Slow mover, but Rahul, why are you bullish on Coal India?
Yeah, if you look at the chart, it has been forming an inverse head and shoulder pattern. Currently, it is just nearing the extended right shoulder.
This one.
Now the candle is red. But why I am saying that we could see a breakout, because fundamentally, there has been a production rise. But being a PSU company, it could see a high volatility. So we have to keep some cushion for accumulating the stock. So definitely from 237 to 230, 31, one can accumulate with a strict stop loss of 226. On the upside, I feel that it can test the neckline, which is around 260. And in next 3 to 4 months, we could see stock testing the level of this gap area, which is 277 to 280 odd levels.
Okay, that's the sense. So this is more on accumulate on decline strategy that you're saying. And in how much time do you see this level again being retested around 250 to 255?
Maybe it could take maybe next 7 to 8 trading sessions.
Okay, thanks so much for that, Rahul. NS, Coal India, would you be a buyer?
I would go contra on this. I would prefer to go short here and short on rise up to 245. Keep a stop loss at 247 and expect it to go down up to 229, 227.
Okay, that's the view. And Aditya, what's your sense?
Even I would go better contra, because if you take a look at the stock, it's completely, the moment it gives you a breakout, it's a false breakout and stock goes into again a downward trajectory. So even now it's done that, it's approaching its downward support, which is somewhere around 227, which is similar target as NS is pointing out. At current levels, probably I look the stock first testing 227, and then probably if it takes support at 227, reverse. But at current levels, I expect the stock to first test levels of 227 to 229.
Okay, that's the view that's coming in. I think it's the first anti-consensus view that's coming in from the person who recommended it. So varied views coming in. While Rahul is indicating a buy at this level, the other two guests are indicating that the counter probably will fall from this level. And the final chart from Analyst is Godrej Properties, and Aditya has a buy call in on it. Yeah, let's have the chart, Aditya, if you can. Yeah. So it's corrected significantly. I think the numbers were decent, but I think it's fallen significantly.
Yes, stock has taken a knock from the highs of 1000, and it's taken support at 78.6%, just below 61.8% I was talking of in the previous chart. Again, 78.6% is another Fibonacci retracement level, which holds of important value. Apart from that, what makes me bullish on the counter is if I take a look at this low and this low, this is a higher low. If I project the RSI from that low to the current low, which the RSI has made, it's made a lower low. Price has made a higher low, whereas RSI has made a lower low. This setup is called a positive reversal in technical terms. Why it is called a positive reversal is because prices made a higher low, whereas RSI made a lower low. That tells you that the stock went into a oversold territory, despite the fact that the prices remained at an elevated level from its previous low. So this is an extremely bullish signal the stock has given. Second, it's broken out from this channel in trade yesterday. It had broken out, and it is continuing that breakout. It's trading above that channel, and also there was a narrow W consolidation, sideways consolidation, from which it is broken out in trade today. So there are multiple factors which tells that the stock is poised to test levels of 990 to about 920 to about 990 on the upside. Probably if it sustains above 990, it can also cross its previous high of somewhere around 1000. So this is more of a buy at current levels or on declines to about 800 for a target of 920 to about 990. Keep a stop at 770, and that will be a decent stop loss and look for a northward target of 990 in the coming months.
Okay, so it's a bullish call that's coming in, more like a positional bet. Thank you so much for that, Aditya. On Godrej Properties, NS, what's your sense on Godrej Properties?
Well, last week we had discussed this stock and I was bullish on this on dips, and it has already given a very good move in last 2 days also. And right now I would prefer to stay long what we're and continue with our long trade, but would like to raise my stop loss somewhere around you can say 765. Earlier we had a stop loss around 730ish. So now it could be around 765.
Okay, bullish call. Rahul, what's your sense?
Yeah, definitely the stock has formed an upward rising channel. Again, the stock has been into positive territory in the last couple of days. The stock is fundamentally into Godrej Properties into affordable housing segment, so that would be a trigger in the coming months. At current levels, one can accumulate from 828 and maybe on corrections to 800. Stop loss should be just below 750. I feel in long run, stock can again retest its lifetime high, which is just above 950.
Okay, so consensus bullish call that's coming in on Godrej Properties. We have a management waiting by, but before that, let me thank all of my guests for coming in today with all their recommendation. NS, Aditya, Rahul, thank you so much for coming in today with all your recommendation. But Pidilite is the company. Pidilite Industries reported a disappointing earnings for the fourth quarter. Higher cost and an exceptional loss hurt the adhesive market's bottom line. Yash Upadhyay spoke to Bharat Puri, MD of the company, a while back and started by asking him about the volume growth outlook. Let's listen in.
So as far as the fourth quarter is concerned, clearly if you look at the quarter in isolation, the growth at an overall consumer and bazaar volume growth will be about volume and mix will be 4%. For the organization, it will be 2.5%. But remember, we don't manage the business by quarters. We've taken a substantial amount of pricing at the end of quarter 3 in December as a result of our input costs having gone up. So actually, while yes, there is definitely in the near term a slowdown in market conditions, it's not as the numbers suggest. If you look at, for example, half 2, our volume growths in the consumer and bazaar sector would be about 9% in half 2 and about 12.5% for the year, which will frankly put us at the top quartile of volume growth for the consumer companies. This quarter, if you look at it in isolation, yes, it will appear lower, largely because there was pricing in 2 of the large divisions at the end of December. Having said that, yes, market conditions have definitely slowed down, which is what we've also said, that in the near term we are seeing slower market conditions. In the first quarter also we are seeing, as a result of the long election, the availability of labor, the availability of cash, of transport, there is some impact on the business. But frankly, in the consumer goods business, as long as we have a good monsoon, I think we should bounce back well in the second quarter.
Right, sir. But having said that, unlike most of the paint companies which have a very seasonal behavior, and you having a very rich product mix as well, this slowdown that you were talking about, which should last for another quarter as well, do you think that it would create a challenge in terms of your full year of FY20, since looking at a quarter would not be the right way to compare it? FY20 in terms of volume growth would be lower than FY19?
Very difficult to say. I mean, we remain cautiously optimistic. It depends on 2 things. One is how our overall demand conditions, and in the consumer goods sectors, more than government, so on, really the monsoon is what matters. For us, really, the silver lining also is that last year, while we had substantial volume growth at the top line, our bottom line was challenged as a result of very high input cost inflation. That has moderated. If you look at quarter 4, our gross margins have improved about 300 basis points over the last quarter sequentially. And if we look at quarter 1, we are seeing improvement further as raw material prices have moderated. So while I can't predict the second half on oil prices as well as the rupee, from what it looks now, input costs seem to be better than last year. The top line is the one that will be the challenge. But frankly, the best time to talk about that probably would be post the monsoon.
Absolutely. So actually I was coming on to your margins, and as you rightly mentioned, there has been an improvement sequentially, as well as the fact that most of your raw material prices like vinyl acetate, monomers and other monomer prices, they have cooled off from the peak of last year. How do you see the volume, the raw material price trend going forward? Would there be a necessity for you in order to increase prices in the near term, since we have not taken any price hikes in the last quarter, in order to also safeguard the EBITDA margins, which have come slightly lower at about 17% versus 18.5% in the same quarter last year?
See, if you look at input prices, frankly, whatever pricing we needed to take, we've already taken. And given the current trend on raw material prices, at least now in the next 3 to 4 months, we don't see any need for any further pricing action. And as I said, we will see an automatic improvement in gross margins. Just to give you a perspective, VAM prices, VAM, which is our principal raw material, was close to $1,400 a ton in the third quarter. It's come down to between $900 to $1,000 a ton in the fourth quarter. So we do not see, therefore, the need for any other further price increases. And hopefully some of that will flow back. We've always said that we will manage our standalone EBITDA margin between 20 and 25%, and that's where we will keep it.
Right. But sir, a big challenge for Pidilite has been the slowdown in the industrial space as well. Although it's not a large portion of your overall revenues, it had been doing quite well over the at least last 4 to 5 quarters. But this time around, again, because of this overall slowdown in demand, that has been impacted. How are you seeing things over there, and what sort of a growth opportunity do you see in the industrial business?
See, the B2B business is about 15% of our business. Now, this is a business which has been undergoing a reset. We've consistently said that we would like to exit the commodity end of the businesses. And last year, as we saw substantial input cost inflation, we've taken the decision to actually cut off some of the low margin businesses, and therefore growth looks depressed. But again, over the medium term, we believe, again, this is a good growth business and should grow at a minimum of GDP growth, if not higher.
Okay. And sir, outside of India, how are things looking on the export front? While we are seeing a slowdown in demand in the domestic operations, has there been any material improvement or an adverse this thing in when it comes to your exports business?
See, our export business continues to grow steadily. Our international subsidiaries, again, it's a mixed picture. The Indian subcontinent, Bangladesh, Sri Lanka continues to grow well. The Middle East and Egypt remains a little challenged. Africa is doing well. But at an overall level, where again, it's in line with our strategy. We're clear that we're an emerging markets player, and that's an area of focus, and that we're going at a steady pace.
So lastly, any inorganic growth opportunities that you're looking out for, and any guidance in terms of the capital expenditure lined up for FY20?
See, as far as inorganic growth opportunities is concerned, an organization like ours is always on the lookout for appropriate inorganic growth opportunities which fit our strategy. But, as I said, when we have something to report, we shall do so. As far as capex is concerned, our capex is in the normal course of business is between 2 and 4% of our sales. We have new factories coming up in Gujarat, in Vizag, 2 of them outside India. But that's normal course of business. There's no inordinate increase in capital expenditure vis-a-vis the past.
Sir, any timelines that you could share with respect to those expansions in Gujarat and Vizag? And what sort of revenue potential would these new facilities bring in, given the kind of product that they would be making?
See, if our business is growing double-digit volumes, then obviously we will continuously need new capacity. This is part of our new capacity. The Gujarat facility will actually be inaugurated in the next 2 months. We've just inaugurated a new factory for our subsidiary ICA in Gujarat 3 months ago. Vizag will open by March next year. So this is in the normal course of business. We would like to keep our capacity utilization between 75 and 80%. And as we near full capacity, we keep putting up new facilities. So this is part of our regular expansion.